ZIM stock has declined more than 40% from its peak. As other stocks declined, there is a major decline in the stock market because of many reasons, like interest rates, war, and overvalued assets. And these events give you the opportunity to find great businesses at a cheap price. And this company has 12.3 billion in assets, of which the cash is 5.1 billion. And as you can see, their market cap is around 6 billion. Moreover, they had 1.7 billion in earnings in the last quarter, and they paid a dividend of around 5.7%. And if they keep making money, they'll continue to pay that huge dividend, and it will be of around 20% a year in dividends. Anyway, if they make 1.7 billion in earnings per quarter, you can double your money in just 1 year, because their market cap is around 6 billion. And in this stock analysis, I'll help you to see their business model, their fundamentals, what opportunities they have, and the risk for this company, whether their dividend is sustainable or not. So stay with me to the end of this video, and you'll find this stock analysis, the outlook for this business, and if ZIM is a good investment. And if you find value in this video, please give a like and subscribe to see more videos like this because I want you to succeed. Let's begin. ZIM Integrated Shipping Services, as you know, is a global container shipping company from Israel, and their business model is like this. They have access to more routes worldwide, where they can ship their containers, and they can easily scale or reduce their business based on the demand, because they rent most of their ships and they just own a few. They have more charter agreements with different container providers, and they simply take their ships and use them for a short period of 1 year or more. So they pay the rent for those container vessels, and they use them to transport freight worldwide, and in this way they make a profit. And they have different customers around the world, for instance Alibaba. And ZIM can send a container to different warehouses in order to load the goods, or it can be done at the port, and then they transport that container on their ships to the final destination. And they have their digital platform or website where ZIM can take new orders, and they provide different digital services, like tracking the orders. Now let's see their fundamentals. ZIM has a market cap of around 6 billion, and they pay a dividend of around 20%. And the revenue is expected to be of around 12.7 billion in 2022, and the earnings around 5.7 billion. Their numbers have grown so much because the demand has increased, and also because of other problems like supply chain and port congestion. And for the next years, the revenue will depend on the demand. And the total assets are 12.3 billion, of which 5.1 billion is cash. Their vessels have a value of around 4 billion, and their containers and other equipments are around 1.3 billion. And their total liabilities are 8 billion, of which the debt is around 4.3 billion. And with the money they have, they can handle well the debt. Now, let's see what opportunities they have and the risk for this company. This industry of shipping depends on the freight rates. The higher the rate, the more money they make. As you can see, the global container freight rate increased almost 10 times in the last year, and that's why ZIM has been able to pay such a huge dividend. And this huge increase was due to high demand, because of supply chain issues, port congestion, and inflation. More companies ordered more goods in order to have a higher inventory. As you know, the inflation is more than 8%, and more companies bought more goods last year in order to avoid those price increases. Now, if the rates remain around this level, ZIM will be able to generate a lot of money, and they expect for this year to have of around 5.7 billion in earnings. So their earnings will be almost at the same level as their market cap. And based on the agreements they have, they expect those numbers. And the company has a dividend policy which intends to pay 20% of the income in dividends. And this will be a dividend yield of around 20% a year. And from what I've seen, they pay the dividend every quarter. In the last quarter, they paid $2.85 per share in dividends. This means of around 5.7% at the current price. So you still have 15% in dividends left if they generate the same earnings, around 1.5 billion per quarter or more. And they expect to deliver those numbers in 2022. Now let's see the risk they have. As you saw, they have a PE ratio around 1, and it seems very cheap. But the market doesn't like this company because the freight rates are declining. And in the next years, they might not be able to generate billions in earnings. And if that happens, they won't be able to pay a high dividend or at all. And if the freight rates go down too much, they have to cut their dividend. And when they do that, the stock price will decline a lot. If you take a look at the global container freight index, you can see that those rates keep going down. Plus, there are many governments which want to reduce those rates in order to help the economy. So don't rely too much on those high rates. You can make 15% in dividends this year, but you have the risk to lose more than 50% if the rates go down even more. So the best time to invest in this industry is when the rates are low. not when they are at the highest level, because your risk is much more higher. ZIM has more than 70 years experience in this shipping industry, but the problem is their business depends on the freight rates, so keep in mind this risk. Now let's discuss about investing in this company. If you look at the stock price and the freight rates, you can see that the stock price follows the rates. When the rates started to decline, also the stock price started to go down. And when you want to invest in a business, you also have to see the risk and the reward. What can happen? Because if you invest at the wrong time, you can lose a big part of your money. So the risk of investing in this company is pretty high. You can see another decline of 50% or even more if the rates keep going down. Even though they have 5.1 billion in cash, don't forget that their debt is around 4.3 billion. And if you do the math, their net cash is 800 million. Now maybe you say that you can rely on their assets, 4 billion in vessels and 1.3 billion in containers. But the problem is, if the demand goes down, those assets won't generate a lot of money in order to cover their value. And you can wait a lot with their assets till you make a profit. And the reward, it depends on the freight rates. If they don't go to the same level as it was in the past, then this business will be able to generate some money. How much, I don't know, because most of the ships are rented, and they can scale or reduce their business based on the demand. What I can say is that you can get a dividend of 15% for this year 2022, but you have the risk of having a decline of 50% in the stock price or even more. So it's not a good deal. You can find better opportunities to invest in. And tell me in the comments, where do you see this business in the next 10 years? And if you find value in this video, please give a like and subscribe to see more videos like this, because I want you to succeed.